Freelancing and gig economy jobs are on the rise, offering a more flexible and self-driven work lifestyle to countless Canadians. However, despite the many advantages, one downside is the responsibility to manage your own taxes. Navigating the world of taxes as a freelancer or gig worker can be complicated, but don't worry. With the right knowledge and planning, you can make smart financial decisions and sail through the tax season with ease. As a freelancer or gig worker, you are considered self-employed, and thus need to familiarize yourself with the ins and outs of self-employed taxes in Canada. Income from freelancing or gig work must be reported on your personal income tax return using the T2125 Statement of Business or Professional Activities. Depending on your level of income and the type of services you provide, you may need to register for the Goods and Services Tax, Harmonized Sales Tax, GST, HST. Being organized is key to successfully managing your taxes. Maintain accurate records of work-related expenses such as office supplies, marketing costs, or internet services. These can be claimed as deductions on your tax return. Additionally, maintain detailed records of all work-related income, including the client's name and date of payment. Keeping track of your financial transactions will make it easier to complete your tax return and avoid potential penalties from the Canada Revenue Agency, CRA, for inaccurate reporting. To simplify your financial tracking and make tax time less stressful, open a separate bank and credit card account specifically for your freelance or gig economy work. This will help you clearly distinguish between personal and work-related expenses, making it easier to determine your deductions at tax time. Also, using a business account can lend credibility in the eyes of clients, portraying professionalism and trustworthiness. Freelancers and gig economy workers are responsible for paying their own taxes, including both federal and provincial income tax, as well as any applicable CPP, QPP contributions. To avoid tax debt and financial stress, estimate how much you'll need to pay in taxes throughout the year, and set aside those funds in a separate savings account. Tip: it's a good rule of thumb to reserve around 25 to 30% of your income, so you won't struggle to pay your taxes when they're due. Maximizing your tax deductions can save you significant money in taxes. As a freelancer or gig worker, a variety of expenses may be eligible for tax deductions, such as home office expenses, advertising and marketing costs, professional development, and vehicle costs related to work. It's important to understand which deductions apply to your specific situation and to keep detailed records of these expenses, including receipts. While some freelancers and gig economy workers might be comfortable managing their taxes independently, others may find it beneficial to consult with a tax professional. A qualified accountant or tax consultant can help you navigate Canada's complex tax system, ensuring you claim all eligible deductions and comply with CRA regulations. Although hiring a tax professional will be an added expense, it may ultimately pay off in the form of reduced tax bills and peace of mind. Tax laws and regulations are constantly changing, so it's crucial for freelancers and gig workers to stay informed of any updates that could affect their tax obligations. The CRA website is a great resource for information on tax regulations for self-employed individuals, and joining freelance or gig economy communities can also help you stay on top of changes and share tax tips with peers. Tackling taxes as a Canadian freelancer or gig worker can be challenging, but with the right strategies, organization, and support, you can navigate the process with confidence. By following these tips, you can optimize your finances and set yourself up for success, both professionally and financially.